the Gold and Silver Club trading strategies for gold and oil, presented by myself, Phil Carr and Nick Cowsey. It's a pleasure to be here today. The session today is going to cover the key fundamental drivers for the precious metals. We're going to look at technical analysis. We are going to be identifying highly profitable trade setups on gold and oil. We will be looking at short to mid-term forecasts, and of course, we will be answering any of your questions today as well. Okay, so I'm Phil Carr, professional trader, trainer and speaker. I'm also the co-founder of the director of the Gold and Silver Club. I specialize in teaching people how to make money from trading the most lucrative financial markets in the world, so gold, silver, oil and the commodity currencies. I've trained thousands of individuals to become independent traders and successfully manage their own investment portfolio, and I'm responsible for the research and development of the Gold and Silver Club trademark strategies that have a proven track record of generating returns for traders. Also a regular contributor to a number of financial publications and speak at numerous trading seminars, webinars and workshops. Joining me on the call is Nick Cowsey. Now, Nick Cowsey is a professional trader, investment analyst, and speaker. Nick began his career within private wealth management in 2002 before making the transition into proprietary trading. Prior to co-founding the Gold and Silver Club, Nick actually spent over 5 years coaching professional fund managers and traders internationally for some of the world's top-tier hedge funds and investment banks. And through his first-hand relationship with some of the world's most successful traders, he discovered the formula, mindset, and tools that give any individual the definitive edge to trade in any economy, and also regularly writes for a number of global business and financial publications, and we've appeared frequently on financial television. Okay, right, what I'm going to do, guys, I'm going to switch this across to my screen. We're missing a few parts of the content on this slide, so if you just bear with me, I'm going to just switch this across and you'll have my screen very shortly. Okay, good. Right, that's just loading up. In the meantime, before we do that, I just want to really update you on the news today with the gold and silver market. So it's obviously been quite an incredible week this week for the gold and silver market. So this week, the big news really, gold broke below $1,200 an ounce, headed for its worst week in 30 years. The gold price dropped sharply just yesterday, hit another fresh 3-year low below $1,200 an ounce. The spot gold price fell by 3% to a low of $1,179 an ounce. So we'll be going through this with you guys today, and we'll be talking through how we traded it, what we expect to happen next. So overall, gold is down 15% since the beginning of last week. It's headed for its worst weekly fall since 1983. So we've seen some big moves, and with big volatility comes big opportunities to make a lot of profit. It's the worst quarterly performance for gold since 1968. The steep price decline coincided with remarks from Atlanta Federal Reserve President Dennis Lockhart. Lockhart said in a speech that the Fed will eventually reduce its balance sheet, i.e. quantitative easing, and also said there are no inflationary problems on the horizon, adding that it's likely the Fed will start looking at raising interest rates sometime in 2015. So this helped the dollar index to rally and weaken gold and silver. So this week alone, gold has moved an average of 800 points, creating a number of highly profitable trading opportunities. And we'll show you in our top trades of the week how we traded that alongside oil as well. Okay, so what we're going to do now is we are going to just bring up for you. I'll just share my screen so you can see my presentation. Just bear with me. Okay, here we go. So that's going to be loading up anytime now, guys. So just bear with me as we bring this up. Okay, so I'm just going to check that you can see my screen okay. Fantastic. Okay, great. So with that, we're going to get cracking, guys. So why the current market conditions benefit gold and silver traders? Well, the best way really to profit from gold and silver in these financial markets is from trading and not by simply investing in physical products such as coins or bars. There is no doubt precious metals investors who own physical gold and silver are taking a bit of a whipping at present. Traders are reaping huge rewards in what can only really be described as one of the most lucrative years in the history for gold and silver trading. Following June's FOMC meeting, gold and silver combined move an average of 1,000 points within the space of 48 hours, which we'll talk you through, creating a number of highly profitable trading opportunities. And we'll show you that in several examples. So to quote Bloomberg, trading is probably the single most recession-proof activity out there today and will be for many years to come. So the key fundamental drivers for the precious metals right now. Well, it's not enough really to know just the technicals when you're trading gold and silver currently. It's just as important to know what makes the gold and silver markets move. So gold and silver, it's not behaving like a safe haven asset as it once did. It's clear to see that over the last 18 months, gold and silver characteristics have changed. So have the rules of making money in these markets. So instead, precious metals are now acting more like risk-on, risk-off assets, driven heavily by major news announcements from, of course, USA, China, and Europe. So those news announcements, you've got US non-farm payroll. So this has a large impact. Of course, US non-farm payroll is going to be next Friday. And for those of you who do trade the gold and silver market, you'll know this has a big impact on the US dollar and also on gold and silver. Very day tradable. It measures the change in the number of people employed during the previous month, excluding the farming industry. Job creation is the foremost indicator of consumer spending, which accounts for the majority of economic activity. So interest rates also have a very large impact on the markets. Interest rates set by central banks exert an enormous influence. So traders watch the interest rate changes very closely, as short-term interest rates are also a primary factor in currency valuation. Of course, you also want to be mindful of inflation numbers like CPI and PPI are key way to measure changes in purchasing trends and inflation. Eurozone as well, the growing debt situation in Europe has had a significant impact on precious metal prices and is likely to continue to do so for the next few years. So you'll see that very much the impact that Eurozone announcements have on the euro, which you can see that relationship, correlation with gold and silver quite clearly, which we'll be talking about very shortly. Fed Chairman Bernanke and the Federal Reserve. So as head of the Fed, he has more influence over the US dollar's value than any other person currently. His speeches are often used to drop hints regarding future monetary policy. And we've certainly seen that in the month of June. We've seen the US dollar impacted massively by news announcements by the Federal Reserve and also gold and silver, which has provided a lot of opportunities to sell short. So we are going to be talking you through that today. So first of all, I want to cast your minds back to the 19th of June, the FOMC minutes which were released. So this is what I've got up on the screen here is just my my Metastock, my Reuters platform here. Actually, you know, Jeff was talking earlier from Metastock, and I would just like to go through really how predictable this was in terms of fundamentals, which lined up with our technicals for shorting gold. So in the evening when the announcement came out, so London time, this was actually just after 7 o'clock. You can see this 10 past 7. Gold turns lower after FOMC statement. So it's coming through from Reuters. This is when the Federal Reserve is hinting an end of quantitative easing. Just very simply within 1 hour, gold had started to fall 0.8% to $1,357.44, its lowest level since May the 23rd, extending losses on Bernanke remarks. So you can see this very cleanly. I'll show you on the chart as we started to break some major price levels, and you can technically, this was a very nice entry to start shorting as the US dollar started to rally. Now, this was just 1 hour later. Within 12 hours, again, the news that we had coming through, gold falls 1% to over 2-month lows to $1,330 an ounce and 55 cents on worries about federal stimulus rollback. So that's within 12 hours, we've seen a 300-point drop now on gold, and you're just very simply able to ride this down. So it's only a 48-hour trade that you need to be in this, just following the trade down with your stop to lock in profits. Then we have within 24 hours, gold falls 5% to $1,282 an ounce and 81 cents. It's lowest since October 2010. And within 24 hours, we've now moved down 800 points on gold since that Federal Reserve announcement. And then by the time we get to Friday, we can see the COMEX Friday the 21st of June, this was 1 in the morning, London time, COMEX gold had fallen another 1% to 3-year lows of $1,272 an ounce on the Fed stimulus rollback. So very clearly here, fundamental news affecting the gold and silver markets. So within 36 hours, there we had our 900-point drop on gold. So what do the technicals look like? Okay, first of all, this is when the Federal Reserve announcement came out, the FOMC statement, and immediately the US dollar index started to rally. So you can see that big bullish candle on the chart there, where we started to see the price rally pretty much immediately on that news to the upside. So as soon as we started to see the US dollar index rally, we started to see gold and silver move lower, and also crude oil and WTI oil. So here is what happened over the 48-hour period, but I will talk you through step by step what actually happened. So this was the 19th of the 6th, 2013. Gold dropped from $1,363 an ounce to $1,272 an ounce, creating a sell short opportunity of 900 points within 48 hours. So what I don't want to do is give you plenty of examples, you know, going back years and years, as I think a few of presenters, Chris, Jeff and Steve pointed out this evening or this afternoon, that it's very easy to go back on charts and cherry pick where you may have seen previous very obvious signals on your chart. Well, this is just going back to about 10 days ago and how we traded it. So very relevant to today's market and what's actually happening right now. So we had that big gold drop, and what I've drawn on my chart there, which has been very useful for shorting the gold and silver markets, is very simply a consolidation box setup there. So all we've done is what you tend to find with the gold and silver markets is that we'll have 1 or 2 days of a lot of volatility. You'll have big moves, and at the moment these are being driven heavily to the downside. So the overall trend is down. We're below a lot of key moving averages. Key moving averages there pointed out by Steve earlier. We're well below the 200-day. We're below the 50-day moving average and some other key indicators we use. So the market is very much in a downtrend. The trend lines are down. Everything is suggesting or has been suggesting lower. So you just need the fundamentals in order to push the price that bit lower. So you will tend to see the market will have a big move, then it will consolidate. Anywhere typically between 48 hours up to 2 weeks sometimes. You'll just see the market really start to, the daily volatility will slow right down. The average daily volatility for gold is circa around 300 pips or 300 points per day. We've found when the market starts to consolidate that you'll start seeing that volatility drop right down to around 100 to 150 points, at which point, once you've seen this occur over 2 or 3 days, you can start, particularly if the price is finding support at a key level, you can start drawing your box around the price. And then all you're looking for is a breakout within that box, and often you'll be able to get a 2 to 1 or more, just very simply on a day trade for that. We've got plenty of examples of that on gold and silver recently. So already on the break of 1371, we actually had a setup earlier on in the week before the Federal Reserve announcement. So how we traded gold and oil using key technical and fundamental indicators in June. So we had, here are some multiple consolidation zones on gold and the key price levels providing box setup. So I'll talk you through each one, but this is an overview over May and June of the consolidation zones that we got at key prices. So first of all, this is on Monday the 17th of June. So bear in mind the Federal Reserve announcement was on the Wednesday. We were looking for a breakout of consolidation. So here we had the price very tight. So you've actually got 2 Fibonacci levels there. You've got the 61.8, the 76.4. Price was just moving within that very tight range between $1,395 an ounce to $1,373 an ounce. So you can see that consolidation zone, key price levels really for the price to break through, and we were only really looking for a 2 to 1 on those trades. So typically you're looking for your stop loss to be 50% of that box, and you're looking to take a 2-to-1 or more on quite a quick, short and sharp move once the price breaks out of that consolidation. So what you'll often see after a big move, the price will coil up, a bit like a spring, and then eventually when the price breaks through, it will often happen short and sharp, and you can take advantage of that. The volatility on gold at the moment is such that you do want to be banking your profits a lot of the time on a day trade basis, particularly if you're going counter trend. If you're with the overall trend and you're selling into the market, you can often hold on to those positions longer. But there are advantages to also counter trend trading as long as you can be in and out quickly, because often you can capitalize on the profit taking of the short sellers because they need to take profit. Particularly we saw that yesterday as the markets come towards the end of the month. We did see profit taking at a key level at 1179 or 1180 on gold, and we've seen a nice move up since then of around about 400 points yesterday. So we'll have a look at that as well. So bringing you back to this example, Monday the 17th of June, this was what we were looking at. So that was the setup that we'd highlighted, and then we were looking for a breakout in either direction. We had it on Tuesday the 18th of June. We started to break through that consolidation of $1,372 an ounce. So at this point, the market was at 1,364. So it moved about 80 points at this point. So nothing too major currently, but providing at this point circa around a 1-to-1. But that is our entry onto the trade, and we are continuing to short the market from that trade on Tuesday. And often you will tend to find this when you have major news announcements for the gold and silver market, such as the Federal Reserve, that you will see often that the move can happen up to 24 hours beforehand, that you start to see the move is telegraphed in the charts, and you can start to jump on that move. That's certainly been the case recently. So we entered in Tuesday, and then here is the price on the Federal Reserve announcement. This was actually a announcement that we traded live in a live trading room with our traders. So we were showing the entry point on this. So as well as the break of that level of 1,374 there, going back to a point that Steve brought up as well, you've got a inverse hammer there as well as the price. The momentum is coming down there at 1,359, and we are seeing gold turn lower after Federal Reserve statement. So there's no need to get out of this trade right now. We're going to continue shorting. In fact, you can add positions to this trade from that news as we broke the previous day's low, which is 1,360. And we saw that inverse hammer, and the price was clearly starting to break down lower. So that's Wednesday, the 20th of June. So fundamentals confirms our short position. And here we go. So and then on the 20th, we then have, this is the following day, further confirmation. We broke through, again, a key Fibonacci layer, $1,353 an ounce, and then the price just absolutely tanked. So all the way down to 1,289, creating a very profitable sell short. So the initial risk there, 100 points, creating a 740 point move just over 48 hours for a 7-to-1 risk to reward. So key fundamentals and technicals utilized on that box trade. So that's just showing you going back about 10 days ago, or 2 weeks ago actually now. Okay, so and after this this big move down, you may think, okay, well that was you know, fluky. These don't happen all that often. Well, we did actually get another setup just this week as well. Earlier on in the week, we came down to test the next Fibonacci extension level there, $1,276 an ounce, where the price did find some support. This time it wasn't, it didn't go on as long the actual area of consolidation, but we did find that we consolidated over around 3 days. That the volatility started to lower, and we were again able to draw just a box over that price and able to capitalize on any further down moves. And we did break through $1,270 an ounce there, the previous low going back to the 20th of June. And we had another opportunity just to sell short, and again a big move down. So the risk to reward on this was good. So 4-to-1, risk was 100 points on the trade, got in at 1260 and came out at 1227. And now 1227 was an important level because that happened to be the area of resistance going back on your chart to November 2009. That was a key area of resistance. So we could see a lot of traders were looking. It was between the 1,224 to 1,227. We definitely got profit taking at that level because we saw the market spike to 1,245, but it didn't do any more than that. It just seemed to be on profit taking, and it was a good opportunity to take profits. Now, again, this week as well, just actually yesterday, we had another consolidation area. So we dropped down into the 4-hour time frame here, and from that level, $1,221 an ounce up to 1,245, we started to find a new level of consolidation. Again, very, very clear box setup forming. This is where we actually set up some nice pending orders. We were actually teaching a workshop at the Gold and Silver Club, and we set these up with our traders whilst doing the workshop. So a break below the 1221. Well, a break below 1224, but we wanted further confirmation of 1221. Saw a very quick move. It was within 1 hour we hit our profit target. So we just went for a 2-to-1. This was a move that all we did, we set a profit target in advance. We set a pending order to sell short at 12.21, and very simply we reached profit within 1 hour of that triggering, which happened to be circa 7 p.m. London time. And that was a very quick example of a 2-to-1 trade, another day trade opportunity on gold. And you can see the overall trend, the downward trend in gold, and that was just on Thursday. So yeah, again, nice opportunity again there. Now we have broken slightly lower in the gold market. Now we got as low as 1180 before the market did manage to find some support, and we found some what seems to be profit taking at that level, and we'll have a look at that very shortly in our technical analysis to see what we expect next for these markets. Now, as well as gold, I want to talk you through a nice setup that we also had on Brent crude oil as well. So the setup that we had, let me just go back to my chart, and yep, on Brent crude oil. So this was going back to the day before the Federal Reserve announcement as well, and what we found that Brent crude oil had reached a key level of resistance, and this key level of resistance was around the 106.20 level there, and the market was really starting to run out of steam there. So between 105 to 106, just above 106 there, we started to form consolidation zone as well, and you know, crude oil tends to have quite big volatility on a day-to-day basis, can easily move over 200 pips a day. Well, we started to slow down a lot on the volatility. We had two inverse hammers there at this key level of resistance. With pinpoint accuracy, the market sold off on 3 occasions at 106.60, which leads me to believe that there are obviously some orders in at that level in order to short the market, or that was a very clear level of profit taking. And that coincided very nicely again with the Federal Reserve announcement in the evening. So this is the setup we're looking at. We had a key level of resistance. We were also had an inverse hammer, 2 inverse hammers on the daily time frame, and this is what happened next. So that is on Tuesday the 18th of June. So Wednesday the 20th of June, we get sell short confirmation. We enter into that trade with a pending order 105.87. Again, the Federal Reserve announcement, which was the FOMC statement, indicated that QE3 was going to be tapered back in 2014, and we saw the US dollar rally immediately from that, and we also found gold selling off, and that was a nice opportunity to also sell short Brent crude oil. And this is what occurred over the next 24 hours. So this was the rather large move there. You can see very sharp move down, and this was from a risk of 75 pips on the trade for 385 pips profit, 5-to-1 risk to reward just within 24 hours of a very simple setup there as well on crude oil. Again, taking that was also a level of resistance that we utilized there. We utilized the key, we had a candlestick setup there as well. You had 2 inverse hammers at that level of resistance. We utilized the box setup. We also had fundamentals, and we had a good risk to reward on that particular trade. So that is another example of how we've been able to capitalize on the recent market volatility. Okay, so what I'm going to do, so that's giving you some real clear examples of how we've traded recently utilizing the box setup. So I'm just going to bring you onto my charts now, and first of all, I'm actually going to, let's just go on to, we'll go on to gold, but what I'll do, I'll also bring you on to my live charts in a second as well. Okay, so here I'm just going to show you some market analysis using our charts. We use the DirectFX MetaTrader platform, and I'll just show you through that. So here's very clearly the different box setups that we've had over the month of June, which has been very predictable once we've broken through the lows, and they happen to have all been at key price action levels. So you've got the 1353 level, the 1276 level, the 1222 level. So each time we've broken a key level after consolidation, we've been able to sell short at those key levels and be able to profit very nicely. That's the 4-hour chart. So here is the daily chart. This is the daily chart just going back to yesterday's technicals. So you can see the overall downtrend that we've been in gold since really the end of April there. Well, we've been in the downtrend since September 2012, but you can see the downtrend that we're currently in. And here is where we bounced off the $1,180 an ounce level yesterday, which seems to be some profit taking which has occurred towards the end of the month. But that actually, watching that real time, what you would have seen is a strong hammer or dragonfly doji, which then turned into a bullish engulfing candle. So those of you who are au fait with your candlesticks, as Steve was discussing earlier, this is what we saw at that key level at the 1180 level. And I'll go out to my monthly chart and you'll see why that was a key level. So obviously a key level that short sellers have targeted for selling short gold there. And we're seeing at the moment some bullish momentum. So yes, we may see the price now be able to put in a little bit of a relief rally here. We've got some key levels to get through, 1276 level, 1321 level, and we may even be able to come back to within that that resistance channel, which will bring the price back to 1,353. But we'll have a look at that shortly on my my live charts. And here is the monthly chart on gold. So here you got that 1180 level, which was a key level of support and resistance going back on our chart towards the end of 2009 and beginning of 2010. So you can see, technically speaking, how well gold is reacting to these key levels, even going back to quite some years now. We're going back over 4 years on the monthly chart. You do want to make sure you have these key levels on your chart as well when you're trading the gold and silver markets. And we can see that any breaks below 1180, there's not too much support. There will be interim levels of support below it, but there's no major levels of support until we get to around the 1050 to 1036 level. And likewise, if we were to see a relief rally from here, we could see the price probably come back to the 1326 levels, where we may encounter some resistance and see another leg down for short sellers to take advantage of. So very shortly, I'll go and show you my live charts. We'll just look at a few more details on that. WTI daily chart. So this is what I'd like to like you guys to check out as well. So on the WTI chart here as well. By the way, whilst we're going through this, I will just mention Nick Halsey is online as well, guys. So he's going to be helping answer any of your questions in the chat. What we'll do, we'll come to any of your questions at the end as well. But if you've got any questions that you'd like answered real time, Nick will be helping you answer that in the chat function. Okay. So going back to WTI on the daily chart here. So what we've got, actually quite a nice setup just at the moment. You can see WTI oil as it closed yesterday. We have a nice inverse hammer there at that key resistance point. Again, we've come all the way up and we've tested. We're just here at the 97.81 level. So it's really working like clockwork at the moment in terms of this market is channeling sideways. It's been moving. Really, we found a lot of strong support around the 92.60 level and just coming back up to the 97.81 level. So very much a range-bound market at the moment on WTI oil. So yeah, we are watching this market very closely at the moment. We're very interested to see if we're going to see the low of yesterday at 96.28, if we're going to see that breach next week. Obviously, yeah, we've got a nice inverse hammer there, which has just come right off a level of resistance there. So that's what we're looking at on WTI daily chart at the moment. We discussed that at the start we would be looking at live setups at the moment. So that's certainly a market for you to be watching next week. WTI monthly chart. So now we're going to go over to the monthly chart. And again, using just the Fibonacci levels, which have been discussed by Chris, done just previously to ourselves this evening. And we would absolutely agree. Fibonacci extensions, retracements are fantastic. For your trading. You want to utilize these, particularly if you're trading the gold, silver and oil market. So you can see there we have a key retracement level at 97.81 and we're finding levels of support and resistance all the way along throughout these retracement levels. So key levels there: 85.11, 89.97, 93.89, 97.81. Of course, you want to also draw in your own trend lines, your own key support and resistance levels and moving averages where relevant to your trading strategy. But WTI oil, yeah, has been really following this sideways moving channel now for circa just under a year, really. We've been moving very predictably on this market, and especially when you combine the setups with fundamental news as well, you'll find that often WTI oil or crude oil, you can be in and out of your trade 24, 48 hours. You can be 4, 5 to 1 if you catch it okay. You don't want to put yourself in a position where you're getting in at risk to rewards which make it unfavorable for you to take those trades, but often you're looking at no more than 100-point risk on your trades for at least over 2 to 1 on those day trades, if not more on your swing trades, anywhere from 4 to 500 pips over 48 hours to several days. Brent crude oil as well. So Brent crude oil very heavily correlated also to WTI crude oil. So what we're just seeing on the chart, very similar situation, although not such a good setup as WTI oil. We've got an inverse hammer, which has then turned into just a bearish candle there. And just looking at that, it's not looking as lucrative as WTI oil. We are following this closely, see if we're going to get a retest of the 99.65 level. So what you'll notice here, hopefully on your chart, you can actually see, let me just see if I can take this drawing tool and just show you here. Okay, hopefully you can see my cursor here. You should be able to see the 99.65 level has provided support on a number of occasions. So it's 1, 2, 3 times that's provided support. So very interested if the price comes back towards that level, see if we get a bounce off that level, see if we get a nice strong hammer setup if the price was to come down, and just continue to see whether this this sideways channel is going to keep going for the Brent crude oil and WTI oil markets. So both very lucrative to trade at the moment. Okay, so guys, what we're going to look at now, so we'll look at our, we'll go and have a look, go ahead and look at our forecast, our short to mid-term forecast on the gold market. So first of all, what we're going to, we're going to have a look at silver as well. Silver's very interesting currently and has been this week. Actually, I'll tell you what, let's go across to silver first, because again, this is a trade that we posted live in our forum. So again, you've got a really box setup here again that we had just on Thursday on silver. So what we were finding, this was on Thursday, whilst we were doing a workshop again actually, where we had a box setup. Now what you got to remember about box setup, where you get a lot of consolidation, is the market could break out either way. It's preferable to take these with the overall trend, which happens to be downward trending at the moment. But what you want to be doing is, if you are going to take a trade counter trend, you want to be in and out quickly. We saw that certainly. You've got a pending order, which actually, I'm just having a look at my pending order at the moment, which actually triggered, and that got us in at 1906 or thereabouts. So you can see we're wanting just to clear the, here we go, we're wanting just to clear the highs going back to last week of this consolidation, and we had a breakout on Friday. You can see here where the price came. You can just draw a very clear downward trend channel on silver. We also came across a horizontal level of support at 1815. Traders obviously took profit at that particular level, and we were monitoring this quite closely due to the fact that the market was coming down and testing a horizontal level of support as well as the downward trending channel. So just going in the 4 hour, very simply drawing out a box setup on that. We broke out pending order 1902. We weren't looking for much more than a 2 to 1, risking circa 30 pips on that trade to make 60, in and out very quickly. And you can see we had a Fibonacci level just above there. So it was a good profit target for us just on Friday. So overall on silver, I mean, yeah, we could see a little bit of a rally now back towards this, the upper end of this resistance channel, which would really, let's have a look, that's going to take you back. We've got some work to do. We have to get really through the 1980 level on silver, where you can see a little bit of consolidation there. We've got what looks really, we've got large bearish candle followed by an equal size engulfing candle there as well, and you've also got a inverse hammer there. So we've had a nice move there, and what we could see now is just the market just break out to around this 2070 level, or even up to the 2150 level. So that's what I would be potentially looking at next with silver, and depending on where the US dollar index goes in July, I would be looking at whether we're going to just see a continuation, and we're going to see the market come back down to some key levels below, which would really take us down. We're eyeing the 1630 level at the moment on silver as a potential a bottom of this market currently, but for the short term we may see a bit of a relief rally on silver and maybe a short squeeze for those who are remaining short this market. Now going back to gold, so again we want to go on the monthly time frame now on gold, seeing as we've broken through a lot of key levels. So here we go. 1180 has provided some nice level of support there on the market, and we can see previous resistance going back to November 2009, which has now provided support and obviously a level of profit taking. So what would I be looking at next? Well, if the market was to continue selling off, the next level I would certainly be looking at is a break of a 1180. So if we come through and we break down and we start to see a consolidation form at 1180, so we may, we've got a bullish engulfing there and also a hammer which turned into a bullish engulfing. So this momentum may continue now. So we may just start to see the market be able to just pick up next week. We'll see. But we're going to see maybe the market just come back up to this 2082 level and see if that provides some resistance there before the market potentially sells off and goes back within the downtrend. But we've also got the 1326 level, which happens to be the low that we got to on that big sell-off going back to the 15th of April. So I'll be looking at those key levels for a potential relief rally, that's fine. And then I would be looking for those sort of inverse hammer setups around the 1326 level or the 1282 level. And based on those, you've normally got pretty tight risk to reward. Now, after we see potentially the market come back within the trend, then I will be looking to see if we're going to start forming one of these box setups. So if you can imagine if the price did retrace and it came back down to the 1180 level, and then we found that the market was starting to consolidate there quite tightly, and we found that over a few days, so I'm using the square tool on here, it just seems to be the most useful tool to use right now, so hopefully you can visually see that. And then if we start to see the market just consolidate around this level, give it a few days, at least I'd want it about 3 days of consolidation before, either on the 4 hour there or the, you can look at it on the 4 hour or the daily. So we'd start to see a level of consolidation, which could appear, it could appear at one of these levels as well, 1282, just at any key price action level. But where we see the market just starting to build some consolidation there, let's draw one more in there just to give you a view. Okay, so just, we could overall see that. We could just see the market consolidate. So you can draw a square around it, then a box around it. Then I'll be just looking for a break of the 1180 level in order to sell short potentially with the overall momentum. So again, going back to our forecasting on this. So at the moment, in the short term, yes, we could see a bit of a relief here. We could come back up to the 1282 level, and beyond that, maybe a rally to the 1326 level. That's going to be important for the bulls to break through. We're going to be keeping an eye on key moving averages as well. But as you can see right now, we're below, we're below the key, the 50-day there as well as the 200, which Steve, you mentioned earlier as well. So the market is certainly well within a downtrend currently, and we are looking for levels of where the price could break down to and bottom out for. July is typically really, in terms of seasonality, it tends to be a consolidation to weaker month. Certainly May and June tend to be weaker months. Now, if you're going to start to look for bargain hunting on the gold market, you want to really turn your eye to August and September. One of the main reasons being is that in Asia, that tends to be the start of the wedding season, and we do typically we tend to see more buying August through to October than we would see in the earlier part of the year. So it tends to be a stronger time for gold and silver. So July will be looking for more consolidation to potential weaknesses, see if the price will break down to the 1050 or 1036 level, and from there we'll start to see if we can start to see a short-term a rally on the markets going into August and September. So that's what we're looking at in the short term, guys, on the gold market at the moment. So we're very much bearish at the moment to neutral moving into July. We'll see if the market continues to consolidate, but those are the key price action levels that we will be looking at. And what I shall do, so what we're going to do very shortly is we will bring it back to some of your questions. I think there has been quite a few questions which have come through. So actually what we'll do, whilst we're on the gold chart, we'll bring any questions. And Nick, if you've got any questions in particular. And just in terms of the actual, the Direct FX platform we're using here, it's a MetaTrader Direct FX. Just let Nick know if you want a, there's a demo account on that. Nick can just share the link with you guys. Great platform for your trading of gold and silver. So if you, if you do want access to that, Nick can just provide the link for you. Okay, so let me just move this across and see if I can view some of your questions. Bear with me. Okay, let's move it from some of my multiple screens here. Okay, so yeah, guys, if you want to repeat any of the key questions you've got there, I'll go to Hamada's question first. Just there's a lot of chat there, and it's easier for me just to see it if you post it. Um, if you repost, or Nick may have answered some of you. I think Nick's answered a few of your questions already. What we'll do, first of all, Hamada, okay, going to your question, what is your short-term view of crude? Okay, so I'm just going to go back to my crude oil chart here. My short-term view on crude, I'll cover WTI oil crude. So obviously, at the moment, what I'll do, I'll bring up my presentation here for you guys. Bear with me. We'll just bring up the chart for you to have a look at. Okay, so short-term view on crude. Well, obviously we came up to key level of resistance around 97.81. This is a level where we had alerts go off anyway, just signifying we've come back to a resistance level. It's a key Fibonacci retracement level as well on WTI oil. And from there, this is what we were looking for, this inverse hammer at that particular level on the daily time frame. So, well, I'd be very interested to see if on Monday, on the Sunday open, if we're going to break through the low, which is 96.28, the low of that inverse hammer, in which case I would expect the market to come down, be looking at potential levels of 93.90. That is also a retracement level, and seeing if we can come all the way down to the 92.60 level. So in the short term there, bearing in mind that we've bounced off that level of resistance and the candlestick setup is quite bearish, I would be looking for the market to come down. And in the longer term, I'm looking for this market to continue to channel. We just seem to be channeling sideways at the moment on this market. Okay, so what are the moving averages used on the chart today? So we've got a combination of using moving averages. The overall moving average, the blue and the red moving averages that we've got on the daily time frame are the 200 and the 50-day as well on our chart. Okay, do you look at key times of day, night to place order? Yeah, Doug, that's a good question. So if I'm looking to I do a combination. So I trade off a number of different time frames. If I'm trading news, I'm going to be much tighter on my time frames, dropping down to the 15-minute to 30-minute time frames. If I'm trading, if I'm doing my end of day trading, I'll be looking at the daily time frame. The daily chart you've got in front of you at the moment is just a typical end of day trade that you could spot in the evening. You know, do your analysis at the weekend on Sunday, you spot that setup and you can react to that on the Monday. And typically for day trading throughout the day, we'll be dropping down to the 4-hour time frame, particularly with gold and silver. It's a very useful time frame to be trading off, particularly for those box setups as well. Okay, so Doug asking 3-hour entries. Yeah, we use the 4-hour time frame. Yeah, for a lot of the trades. Yeah, 4-hour versus as opposed to 3-hour. Okay, so Paulie just asking, is our service good for long term or is it more intraday? Yeah, a lot of our I mean, typically the gold and silver markets, the way they react at the moment, you really want to be banking profits on a frequent basis. You don't really want to be a lot of those trades. You're going to find it's more profitable to be in and out and be more liquid on your trades. Yes, there are opportunities, as you've seen there, to take advantage of the overall downtrend at the moment, where we're shorted from those box setups there. But overall, on a day-to-day, we tend to find, you know, your average volatility on gold is over 300 points. Getting in and out of those trades has been key in order just to keep banking those, and in order to really make a lot of money on these markets. You want to be quite fluid on them and be able to come in and out pretty quickly. Really the same with crude oil and WTI oil. As you can see, very range bound. You're not really going to be making a lot of money if you're just trying to hold on to a longer term or a shorter term trade, particularly over the last year on oil. It's swing trading. We do swing trading, but typically we're looking to be in and out within the same week on our swing trades. So what time zone do we use? We use the New York close on our charts. Okay, so right now, Jackie, which market are you referring to there? Just which market? If you could just put a note of which market you're referring to. Okay, Lalit. So Lalit is just asking about short-term moves on short-term look at the short-term forecast on gold. So yeah, as we discussed this, so if I just go back to my monthly time frame there. So on the short to mid-term levels that we're looking at, the key levels, where you've got the we bounced off the 1180 level just on Friday, and the current price on gold right now, let's just go back to that, is $1,233 an ounce. If you go, I won't take it off the main presentation right now, but if I'll just talk you through it through my other screen. If you go to the daily time frame, what we saw is the price came test that 1180 level on Friday. We obviously saw some profit taking, end of month profit taking probably as well. You had a nice hammer forming real time where we actually had some pending orders on the 4 hour, and what we saw is the market has rallied from that point. You've got an engulfing candle as well. We've engulfed the previous day's trade candle, so we could get a short-term rally up to the 1,276 level. That's probably the first level I would be looking at where traders will probably take profit. Beyond that, 1,322 is also a key level where you could see profit taking, short sellers come back in the market. So I'd be looking at those key short-term levels. If the price was to break down from 1180, I'd be looking for potential short setups. There's not really too much support below 1180 really until we get to around the 1050 level as a major level, going back to really the resistance levels of 2008 and 2009. Okay, so 4-hour periods. Okay, yeah, no problem. Okay, Doug, so Doug just referring to, you're welcome, Lalit. Okay, no problem, guys. Okay, what we're going to do now, guys, as we come to an end, if there's any more questions at all, yeah, do let us know. Of course, thank you very much for your time today. I know it's been well, it's been a fantastic day actually. Just we've been on for all the calls today, and it's been some great talks. And if you do want to get in contact with us at the Gold and Silver Club, very simply, you can contact us at phil@thegoldensilverclub.com or telephone us on 0207 193 0403. You can also go to, if you go to our website, you can also take advantage of our free weekly newsletter. It will actually be coming out tomorrow, and that is well worth taking advantage of as well. So with the free weekly newsletter, bear with me, I'll just explain to you what you actually get on the free weekly newsletter. So you can just find that by going to www.thegoldensilverclub.com, and you will see free weekly gold, silver, oil and commodity currency news, live market analysis and prices. Okay, so do take advantage of that, guys, if this is a market that you are interested in or looking certainly to start trading, or you want some additional help with your trading. Okay, so here is the website again, www.gold and thegoldensilverclub.com, and of course feel free to follow us also on Twitter at goldsilverphil. Okay, yeah, thanks, Doug. Oh, fantastic. Doug's around there from South London. Well, thank you very much for the compliment there, Doug. We hope you could understand us okay today with our English accent. And with that, we've actually got 51 seconds left. So I'm glad we're finishing up right on time. And yeah, fantastic. Yeah, as I said, if you do want to get, if you need to, if you want to take advantage of that free newsletter, do go ahead. Got any questions at all, just fire them over. Thanks very much to Morgan and Trading Pub for putting on such a fantastic event today. It's great to be here. And yeah, good luck with all your trading for next week, guys. And we hope to see you again. So, okay, guys, well, with that, I will pass you back to Morgan. Morgan, thanks very much.
All right, great. Thank you very much, guys. We appreciate you being here. Yes, we will be